I think we're be 500 to 750,000 Bitcoin. I think 2026 and 2027. This is the meat of the money printing. The Trump administration is going to do what they know how to do best. What every government knows how to do best. When in doubt, print the money. If the people are unhappy, print the money and hand them a goodie. And they're going to show up at the polls and hopefully vote for you.
At the same time, we have to remember Bitcoin is up 100% in 2 years. It's up almost 300% in 3 years. It has been compounding. The compound annual growth rate of Bitcoin over the last decade is 70%. This thing has been a monster in financial markets, but it has volatility. And so one of the aspects of Bitcoin that people aren't talking about is that the volatility of Bitcoin has actually been coming down. And so we didn't get a blow-off top that I think people expected in kind of the end of Q3 or beginning of Q4, but we also haven't seen the big 80% drawdown that people normally expect as well.
Markets aren't just about numbers. They're about mood, momentum, and the quiet shift in confidence that happens when people stop trusting the money in their pocket. Right now, that shift is accelerating. Governments around the world are boxed in. They can't cut too deep, they can't tighten too long, and when panic strikes, the answer will be simple. Print. The result? A storm of liquidity that pushes assets into the stratosphere, especially those built to survive fiat failure. Arthur Hayes believes we're heading straight into the heart of this storm. His forecast isn't just a bold Bitcoin price target. It's a response to how the political machine works. When people are unhappy, politicians hand them free money. That's the cycle. And he expects it to reach full force by 2026 and 2027. He predicts the political cycle will reach its peak, unleashing waves of stimulus that will dwarf anything seen before, and what comes next for Bitcoin will be bigger than any previous rally. Anthony Pomplian brings another layer. He reminds us that Bitcoin has been quietly compounding for years. No wild blow-off top, no catastrophic crash, just a steady climb and falling volatility. That's not boring. That's a signal. Bitcoin is no longer a gamble on the fringe. It's becoming the base layer for what's next. Let's watch clips from Arthur Hayes' explosive interview to gain more insight. Don't forget to like, subscribe, and enable notifications for additional in-depth content. Thanks for joining us again. Enjoy the rest of the video.
I'm not sure what's going to be the dominant narrative in 2026. I think that Bitcoin and Ethereum will do very, very well as liquidity improves. And at least the United States and maybe China will follow suit as well. The U.S. has an election coming up. It's time for both political parties to hand out goodies, especially the Republicans. They're the ones who, I think the poly market puts their odds something at losing the House at some like 60% or something like that. I don't know what it is now, but it's over 50%. The market expects the Democrats to take the House. I don't know about the Senate. I haven't looked at the odds, but the only thing that's going to stop that from happening is Trump and his administration just give out a lot of money, print it, give the goodies out to their supporters so they show up at the polls in November. Doesn't matter who wins because both sides promise goodies, right? The Republicans promise goodies. The Democrats promise goodies. Goodies are paid for with printed money. It's not paid for with increases in taxes to a large extent. And so therefore Bitcoin benefits. Obviously, if you're a stock picker, it really matters who wins, right? Democrats like climate activism, social justice, these types of things. Republicans like drill, baby, drill, AI, all those sorts of things. And so picking a stock that benefits in one of those buckets, really depends on politics. I have no idea. I'll just stick with Bitcoin. It doesn't really care who wins in November because they are both going to print money. And I think that Trump knows that odds on favorite they're going to lose. He's going to have to accelerate the money printer and make sure that all of the relevant government appointees get in before a possible Democratic Senate, and they just basically stonewall him for the next 2 years and don't allow any of his appointees to get confirmed. The U.S. Treasury publishes a thing called the quarterly refunding announcement, and if you're a serious crypto trader, I think you should make sure you read that 4 times a year. The most recent one came out on, I think, the 3rd or 4th of November. And for the fiscal year 2025, which ends in end of September, third quarter of September, the U.S. federal deficit was something like $2.3 trillion, right? And so then that was what happened. We care about what's going to happen. The relevant, either the banks, the government itself, they all estimate that the 26 and 27 fiscal years will be in the range of $2.2 to $2.5 trillion deficits. So if the deficit and the financing of the deficit by the Treasury and the Fed was what drove Bitcoin higher and crypto higher, at least in a dollar liquidity context. That situation is going to persist and only get worse because central banks, at least non-U.S. central banks, are buying less and less U.S. Treasuries. I think there's a chart going around that shows the percentage of gold as a reserve asset of non-U.S. central banks is higher than Treasuries for the first time in a long time. And so without these foreigners buying this debt, it relies on the U.S. government to print the money in some way, shape, or form. There's lots of different games that it can play, and you can get into the minutiae about how the money markets work. But from a high level, it doesn't really matter. If the politicians are not going to spend less money, then the Fed and the Treasury have to print it. So you tell me how much money that the U.S. government's going to print, I'll tell you where Bitcoin is, or give you an estimation of how bullish I am. And if they're going to 2 trillion plus deficits, and it could get worse if there's a recession or a war or what have you, then Bitcoin and crypto are going much higher.
If Bitcoin kind of goes to the moon within the next year, we have bigger fish to fry.
I mean, I don't know if there's going to be a problem per se. It's just, purchasing power will be diminished. It really depends on social cohesion within the United States and how people handle that, and what percentage of the population owned the asset that went up a lot and which percentage didn't. Do food prices go up a lot? I don't know. Do rent? All the different things that the majority of people care about? Maybe nothing. There is no inflation in food, and it's just the Bitcoin financial asset goes up. I don't know. So, not necessarily mean there's going to be some sort of like societal breakdown just because Bitcoin's at $1 million. I mean, it'd be different if you said that inflation is going to concentrate on beef and a pound of beef is going to be $150, right? There'll probably be a revolution in the United States if that happened. I think I said $250,000 Bitcoin, and I am going to stick with that until December 31st, 11:59. I think we're be, 500 to 750,000 Bitcoin. I think 2026 and 2027, this is the meat of the money printing. The Trump administration is going to do what they know how to do best. What every government knows how to do best. When in doubt, print the money. If the people are unhappy, print the money and hand them a goodie. And they're going to show up at the polls and hopefully vote for you. I think stablecoins are still going to be a massive trend. I was speaking with a digital asset head of a large TradFi bank, and he was telling me that all the GSIBs, the globally significant banks around the world, are getting together and they're going to launch their own stablecoin, right? And so I think that'll be a big deal. And he said it's, they're working very, very quickly to get something out there, maybe next 6 to 12 months. So I think these are the sorts of things that are really going to accelerate adoption of crypto and get people understanding how a wallet works. Right now, we all understand how online banking works, right? I think even my mom could probably use an online banking app. And that takes a lot of learning for people to, I'm not going to go to the branch. I'm going to, get on this phone and there's not going to be a human talking to me. And I'm going to do all these things on my phone, which is not how you've been doing banking for the last, 500 years. So how do we get people to transition to, okay, now I'm not going to go to the branch. And now, what is a bank? I don't even know. I guess I have this like dollar, yen, euro, yuan digital thing, and I move it around. And there's this whole other ecosystem that's not connected to the banks. And there's all these other products that I can use and trade with. And literally, I just, a few taps on my phone, and now I've got my dollar, my yen, my euro, my Bitcoin, my Ethereum, whatever. It's all over on the internet. And so this is really the explosion of DeFi, when the everyday person has been habitualized to using these digital assets.
The next major crypto rally may not be triggered by a halving or a breakthrough upgrade, but by political desperation. As the U.S. approaches another election cycle, ideology is taking a back seat to incentives. Voters want relief, politicians want power, and the fastest path is spending financed by debt, not taxes. The money printer doesn't need an announcement anymore. It simply accelerates. Annual deficits exceeding $2 trillion are no longer alarming, they're expected. Foreign demand for U.S. treasuries is fading, quietly forcing the system to rely on domestic backstops and stealth quantitative easing. Liquidity seeps into markets under the guise of stability, propping up confidence while devaluing purchasing power. In this environment, assets immune to political dilution begin to shift from speculative bets to strategic hedges. Bitcoin stands apart. It doesn't react to elections or campaign promises. It responds to liquidity. As spending expands and deficits widen, Bitcoin doesn't ask who's in charge. It absorbs the excess. Arthur Hayes frames the macro disorder driving this shift, while Anthony Pomplian highlights the data: steady growth, falling volatility, and rising conviction. This isn't hype, it's math meeting politics. And history shows that when governments panic, Bitcoin tends to win. Let's hear from Anthony Pompliano.
Here is I've been an investor in Coinbase since the private markets, and one of the things that's really interesting is they're going after this everything exchange. They basically want you to be able to buy public stocks, crypto, prediction markets, perps, everything on one exchange. But also, if you see Robinhood is doing the same thing. Coinbase came from the crypto side, Robinhood came from the brokerage side. You also are starting to see now the traditional exchanges and the traditional financial players. Larry Fink recently said that artificial intelligence and tokenization are the two big themes of finance going forward. Right. So what's going to happen here is everyone is going to meet in the middle. They're all coming from different areas, but ultimately they are all fighting for who is going to live at the center of artificial intelligence, crypto, and ultimately these everything exchanges where people can trade whatever they want, whenever they want, 24/7. And so I think that the key for public market investors is trying to figure out who's going to get there first and who actually has the most durable business. Now, Coinbase has somewhat of an advantage. They have 100 plus million users, and they've come at it from a crypto-friendly standpoint. Many of these technologies are using that crypto plumbing, and so having kind of a head start in the crypto side is going to be a big advantage. But I would not discount the traditional players. These people have a lot of money, they're very ambitious, and they understand the regulatory apparatus. And so you're going to have this kind of cutthroat competition, and ultimately the winner is the individual investor or the individual citizen, because they're going to get lower prices, faster market access, and ultimately better pricing on these different opportunities. Yeah, I mean, look, I think that there are a lot of Bitcoin investors that are disappointed that Bitcoin did not go to 150, 200, 250. I mean, take your crazy number that people were predicting. At the same time, we have to remember Bitcoin is up 100% in 2 years. It's up almost 300% in 3 years. It has been compounding. The compound annual growth rate of Bitcoin over the last decade is 70%. This thing has been a monster in financial markets, but it has volatility. And so one of the aspects of Bitcoin that people aren't talking about is that the volatility of Bitcoin has actually been coming down. And so we didn't get a blow-off top that I think people expected in kind of the end of Q3 or beginning of Q4, but we also haven't seen the big 80% drawdown that people normally expect as well. Now, who knows what's going to happen in the future? You could see the Bitcoin price go down a little bit more, or you could see it turn around and start to kind of grind up going into the midterm. You could, but I think given where the volatility is right now, it would be very surprising that Bitcoin's volatility has drastically compressed, and yet still you could get a 70 or 80% drawdown. One of the most interesting kind of theories, if you will, that I've heard is Matthew Siegel, who's over at Van Eck, he basically explained, he's like, look, if Bitcoin's volatility got cut in half, then rather than get an 80% drawdown, you would expect something like a 40% drawdown. That's about what we got from the $125,000, $126,000 price point down to around $80,000. And so, again, does that mean that's what's going to happen? Not necessarily, but I do think that this compression of volatility means that the holders will be a little bit disappointed on the upside because you're not going to get those blow-off tops, but also there is some degree of safety or a persistent bid on the bottom side where you're not going to see these huge, 75, 80% drawdowns as well. Again, if we go back to this idea of artificial intelligence and Bitcoin or crypto are kind of the two big areas where the future of finance is. What I believe is going to happen here is I think that AI and AI agents are going to be offense. They're going to go out and they're going to make money for these companies. You're going to start to see AI applied inside of these financial firms, and they're going to start to automate away tasks and then eventually jobs. And they are going to be that offensive force to go and drive revenue. But then what's going to happen is that these companies are going to take that capital and they're going to go and they're going to stick it into crypto on their balance sheet. You can think of Bitcoin and crypto as the defense and actually protecting that purchasing power. Now, what I find very interesting is that that defense, some of it's going to be Bitcoin, some of it's going to be stable coins, some of it may even be tokenized gold. But I think that this combination of these two technologies is really where the finance is going. And you see it from the startups, but also you see it from the large firms like BlackRock.
The race to build the everything exchange is officially on. Imagine a single platform where you can trade stocks, crypto, prediction markets, and more, anytime, from anywhere. Some players are coming from the brokerage world, others from crypto-native roots, but all are converging toward the same vision. The future of finance won't be limited to one asset class or one time zone. It'll be borderless, always on, and designed around user choice. The question now is, who builds it best? Meanwhile, Bitcoin continues to divide opinion. Some are disappointed it hasn't hit wild predictions like $250,000, but the numbers speak louder than the hype. It's doubled in 2 years, tripled in 3, and its long-term growth rate still puts most assets to shame. More importantly, volatility is declining. Blow-off tops and deep crashes may be fading as Bitcoin transitions from a wild trade to a core holding. It's maturing, and that's exactly what long-term investors want. Behind the scenes, something deeper is forming. AI is becoming the engine for growth, while crypto is evolving into the defense layer that protects capital. From stablecoins to tokenized gold, finance is being rebuilt in real time, and the real winners will be those who adapt first. As we wrap up, do you think Bitcoin benefits more from political uncertainty or economic stability? Let us know your thoughts in the comments below. Share this video and hit the like button. Thanks for watching, and don't forget to subscribe.